The truth about whole life insurance. 5 things to understand before you buy or keep a policy. If you have a whole life policy or you're thinking about buying one, the most important question is not, is a whole life good or bad? The better question is, does this policy do the job you need it to do at a cost you understand and can be comfortably sustained? Whole life insurance can be a valuable tool. It's designed to provide lifetime coverage. It can build cash value, and some policies may even pay dividends. But it's also one of the easiest financial products to be misunderstood because a single monthly premium can hide several moving parts. I'm Carla Debro, a licensed financial professional. I review policies for people who are well served by whole life and for people who paid faithfully for years without knowing what their policies was actually designed to do. This is not a video about attacking agents or telling you to cancel a policy. It is about helping you ask better questions before you buy, before you replace a policy, or before you assume that the one that you own is on track. By the end of this video, you will know 5 things to review with your agent so you can make a decision based on your own goals, cash flow, and need for protection. So let's start with the first one. Truth number one. One premium covers more than one thing. Let's say your whole life premium is $500 a month. Now, it is tempting to think all $500 is building cash value for you, but it's not. That premium supports several functions inside the policy. The lifetime death benefit, the policy is operating expenses, reserves, and depending on the policy, cash value growth. You may not see every component broken out in a simple line by line statement, which is why policy illustrations can feel harder to read than they should. Now, here's a practical takeaway: your premium is not the same thing as your cash value. In the early years, especially, the cash surrender value may be a little lower than total premiums you have paid. That is not automatically a sign that the policy is defective. It's a sign that the whole life is designed as a long-term insurance contract, not a short-term savings account. Before you sign, or if you already own the policy, ask for in-force illustration and ask these 3 questions. What is guaranteed? What is not guaranteed? What will be my cash surrender value and death benefit in years 1, 5, 10, and 20? If you can't get a clear answer in plain English, pause before making a decision. Truth 2, the illustration has 2 stories and you need to read both. A life insurance illustration can show a policy looking very differently depending on which column you read. The guaranteed column shows values the contract promised, assuming you meet its requirements. The non-guaranteed column may show dividends or other values that are based on current assumptions. Participating whole life policies may pay dividends, but dividends are not promised. They can change based on the insurer's experience. Now, this doesn't mean that every projection is misleading. It means a projection is not a promise. A responsible decision should never depend on the policy achieving its most optimistic illustration. Ask yourself, if the policy is lower than today's illustrations assume, can I afford this policy? Will it still meet the protection goals I bought it for? Question matters because you're not buying a spreadsheet. You're buying a long-term contract that needs to work through changes in interest rates, company experiences, and your own life. So don't just ask, what does this policy look like if everything goes well? Ask, what does it look like if the non-guaranteed values are lower than projected? Truth 3, cash value can be useful, but it is not the same as a bank account. Now, the cash value is the reason why families consider permanent life insurance. It can be accessed during your lifetime, subject to policy terms, but it needs to be handled with care. You may be able to surrender part of the policy for cash or borrow against its value. The policy loan is not free. Loans generally accrue interest, and outstanding loans plus interest reduces the cash value available to you and the death benefit paid to your beneficiaries. If a policy with a loan is surrendered or lapsed, can also create a taxable event depending on the policy's basis and the amount of gains. Now, that doesn't mean you should never use a loan. It means you should treat it like a real financial decision, not a shortcut. Now, before you take money from the policy, ask for the answers to the questions in writing. What interest will the loan accrue? How will the loan change my cash value and death benefit? What happens if I do not repay it? Could this cause the policy to lapse or create taxes? A good policy review should show you the effects of a loan under more than one scenario, not just the most favorable one. Truth 4. Whole life rewards long term consistency, so liquidity matters. Whole life can make sense when you have a lasting need for life insurance, stable cash flow, and the willingness to keep the policy for long term. It may be a poor fit if the premium stretches your monthly budget, if you expect to need the money soon, or if you are not yet clear on how much coverage your family actually needs. Now, this is where people can get hurt, not because whole life is inherently bad, but because the policy was purchased before the buyer had a clear plan. If you surrender early, your cash surrender value may be less than the premiums you paid. That is why it is essential to understand in the early years before you commit. Think of it this way: a whole life policy is built to solve a long term protection problem. It is not designed to replace your emergency fund, it is not a substitute for paying down high interest debt, and it should not take money that you will likely need for a near term goal. So before you fund the policy, ask yourself, if my income changed for 6 months, could I keep this premium in force without creating financial stress? If the honest answer is no, you may need a different design, a lower premium, or a different tool altogether. Truth 5. The best policy is the one that matches the job. Whole life is not the right answer for every person, but neither is term, index universal life, a brokerage account, or a savings account. Each tool has a different job. If you need large coverage for a specific period while your children are young and mortgage is outstanding, or a business loan needs protection, term life may be the more cost effective place to begin. If you want permanent coverage, guaranteed values, a carefully designed whole life policy may be appropriate. If flexibility and market index crediting are priorities, an index universal life policy may be worth comparing. But even that has its own trade offs, including charges, caps, or participation limits, and the need for ongoing monitoring. The point is to make sure that your policy aligns with the problem that you're trying to solve. Ask your agent to compare options against clear goals. For example, I need $1 million of coverage until my children are financially independent. Or I want a permanent death benefit to support estate and legacy goals. Or I want to understand whether a cash value policy fits into my broader retirement and protection plan. When the goals are clearer, the right questions become easier to ask, and the right product becomes easier to evaluate. Whole life is not a scam. It is not automatically a great deal either. It's a contract. And the only question that matters is, whether that contract is working for your family, your cash flow, or your long term goals. If you already own a whole life or IUL policy, do not rely on sales illustrations from years ago. Request an updated enforced illustration. Review the guarantees and the non guaranteed assumptions, any loans, and the projected policy status. If you like a clear second look at what you already own, send me a word review and we'll walk through the policy in plain English, identify the questions what need answering, and help you understand your available options before you make change. No pressure, no jargon, just clarity. Have a great evening.